Welcome to Short View Trading. It's your morning market hit for Monday, 18th of September. It's around 9 a.m. London time. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And in these videos, we want to talk about how to go about trading equity index futures on a 1 to 2 week basis, either long or short, the likes of S&P 500 futures, NASDAQ, DAX, FTSE, etc. Any of the key index futures that you want to trade on a short-term basis, that classic swing time frame. What are the things you need to think about? What are the factors you need to watch? That's what we're going to dig into in this video. So when you're trading markets on that 1 to 2 week time frame, there's a ton of stuff you've got to keep an eye on. One of those big groups of categories you've got to keep an eye on is your market timing models, your trading models that I'll come to in a sec. But equally on top of that, you want to watch price action. And at any one moment in markets, various asset prices are critical in terms of global price action and the way the global financial market puzzle fits together. And it's critical to watch those prices and see how they respond to various pieces of news flow. Do they respond as you'd expect on good or bad news flow, or do they do the opposite? Because if they're starting to do the opposite, there's a message about positioning and sentiment that's probably already baked into that price that you need to pay attention to. So the question is, what are we watching at the moment? Well, there's three critical macro prices today. Well, firstly is the oil price. Oil has been very strong over the last couple of months. It's rallied hard from around $70 on Brent. As you can see, $70 became a bit of a base building level, and it's moved up sharply in a pretty strong uptrend ever since that over the last couple of months. And the oil price matters because the more the oil price goes up, the more it pinches the economy and pinches the consumer and takes away from their spending power. So it has a major economic impact and therefore is important to watch and often has an influence on other asset prices. Now, one of those other key asset prices, which is also critical at the moment, that's influenced by the oil price, is 10-year bond yields. One of the key building blocks, or the main building block of global financial prices, the risk-free rate, the US 10-year bond yield, the most important bond yield out there. And as you can see from this chart in front of you now, it's been backing up in recent weeks and months, and it's back at multi-year high levels, pushing on the door of 4.35 yield, 4.34, very high yield levels that we haven't really seen since the GFC. Now, when bond yields back up, they also squeeze the equity market. But equally and intriguingly, of course, they often back up because the oil price is backing up. As you can see from the chart we're putting up in front of you now, one of the key subcomponent parts of US bond yields, the inflation expectations, correlates with the oil price. The two tend to go hand in hand, albeit that correlation hasn't been as tight in recent weeks. But generally, as the oil price backs up, so backs up that key component part of 10-year bond yields that generally pushes up nominal bond yields as well. So that's another critical piece of the puzzle. And higher bond yields often squeeze the equity market. That's the second key price we're watching, US 10-year bond yields. And then thirdly, added to that, the dollar, the US dollar, equally been strong in recent trading sessions, and again often correlates with the equity market. As you can see, the chart we're putting up in front of you now, whenever the dollar rallies, the equity market tends to sell off, and when the dollar's weak, it tends to be stronger. Now that's not 100% of the time, but a lot of the time that's the case. Interestingly, as you can see from the chart, the dollar's been strong in recent weeks, but the equity market hasn't fully caught up in terms of the way it's sold off. So how's that gap going to close? How's that correlation going to reassert itself? Is the dollar going to fall, or is the equity market going to go lower? Because clearly a stronger dollar is generally a tighter liquidity environment. So we're watching those three key macro prices closely like a hawk. All three are critical: the oil price, the 10-year bond yield, and the dollar. All of them in recent weeks are suggesting equity markets should come under increasing amounts of pressure and should pull back from here. Now, as I mentioned at the top of the video, on top of that, we look at a lot of models. And one of those models is our sell-off indicator, which you can see up in front of you now. This model is building towards its key plus 20 level. And when it gets to plus 20, it tells you of an increasing likelihood of a major pullback in equity markets. A tradable 1 to 4 week, 1 to 2 week type pullback that's worth getting seriously involved in on the short side. So this model's building, it's close to giving a signal. It's not quite there yet. We're watching this like a hawk as well, and we feature it each and every day in our daily rag at the moment because it's such a critical chart at this moment in time in markets. But also on top of all of that, there's tons of other stuff, as always, to watch. We feature it every day in the Daily Rag, the Rag Trader, the publication we put out that you can get an introduction to, a trial of, if you click on the link below in the video. Other charts we're watching at the moment, look at the Philly stocks, it's at a key level. And of course, looking at the mega cap tech stocks, also behaving critically in terms of price action, as we talked about in prior videos. But Nvidia's a key component part of the Philly stocks, the biggest stock in that index. So critical to watch Nvidia along with the Philly stocks. The Russell 2000, the mid caps in the States, equally at a key level, trying to bounce off their 200-day moving average. And on top of that, tons of other stuff that we're watching each and every day. So if you're interested in a free trial of the Rag Trader, please click on the link below. Or if you're a subscriber, you should have it in your inbox around 8:30, 9 o'clock London time each and every trading day. And then in terms of what are we watching this week, in terms of macro data and key events, there's a lot going on to digest as well. Most importantly, a ton of central bank meetings. The Fed, the top most important one, Tuesday and Wednesday, announcement 7 p.m. Wednesday London time. Plus the summary of economic projections, the dot plots, and a press conference at 7:30 p.m. London time. That'll be watched closely. Market thinks probably a rate hike. What's the tone like? What's happened to the expectations for interest rates in the summary of economic projections, the dot plots? What's happened to the economic forecast, the forecast for inflation? All of that, unemployment will be watched very closely and digested by the market, and is a critical part of the equation. On top of that, you've got the Bank of England this week, the PBOC's got an LPR decision, you've got the Swiss, Norwegian and Swedish central banks, and you've also got the Bank of Japan, as well as a ton of macro data. So it's a busy week, lots to focus on. All of it will be featured in the Rag each and every day. So thank you very much for listening. Please do subscribe and like these videos. Simply click on the subscribe button and share them on social media, or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.